Hi, this is Randy Finney with Right Side of the Chart, and this is a market update for Wednesday, September 12th, 2018. We're only about, well, not even half an hour into the trading session, so I wanted to do a very quick market update. I just did a video yesterday. I put a lot of commentary on rightsideofthechart.com, particularly in the trading room, but I wanted to reiterate some of the key levels I'm watching and development. So this is the trend line here on QQQ that comes off the early April lows. As mentioned yesterday, we were backtesting that trend line. So far, a pretty impulsive reversal off the backtest. So far, so good. But as I said yesterday, um, although I still think we'll get it, that's I'm still leaning towards a more downside scenario, but the real selling should come if and when we take out the recent lows here. We had this little period of consolidation in QQQ. QQQ popped a little bit above it. The top of that range was there, but again, it back tested the wedge, or I'm sorry, the trend line, which is even more significant than that little area of consolidation. So again, look for more downside. Couple things that I wanted to mention as well. And I did make mention of this in the trading room on rightsideofthechart.com. Yeah, yesterday we printed bullish engulfing candles on QQQ. We had some other, some of the major stocks. So, all in all, I'm sure the bulls were tripping over each other with a big impulsive move up. And by all means, the reversal off the lows was impressive. But again, you have to look at the bigger picture and what you did as you rallied to backtest. Now, the point I wanted to make here is that bullish engulfing candles, just like bearish engulfing candles, they tend to work as the reversal sticks, but the way I use them, and I believe you'll probably find this in some textbooks, that's after an extended or a prolonged or a clear uptrend or downtrend. In other words, and I've said this before, I don't look for here's a bearish engulfing candle right here, but it didn't come at the high. It came in the middle of this trend. So that doesn't mean much. So disregard that. To me, that bearish engulfing candle doesn't really have any technical significance. Had it come at the end of a prolonged uptrend, maybe right here, then that would. But it didn't. So this one is just an engulfing candle in the middle of really a trading range. We're just off the highs. So this is not an extended downtrend. We haven't been in correction mode. So again, I don't put a lot of weighting. And even then, the one thing that you've probably heard me say as well, and again, this may or may not be in the textbooks, but to confirm a bullish or bearish engulfing candle, my criteria is to see follow through to the downside. If it's a bearish engulfing candle that comes at the end of an uptrend, I want to see a red candlestick the next day, ideally the next 2 days. Same thing with the bullish engulfing. So, that was a impressive move yesterday, and the onus is on the bulls to take it up and close today green. So the day is very young, and that's why I'm doing this video to let you know that if they fade yesterday's gains, a good part of it, we can't close above yesterday's highs, then that really takes away a lot of the significance of that bullish engulfing. Okay, I don't want to spend too much time on that, but I did want to point it out because I mentioned it on the site, but I didn't cover it in the YouTube video yesterday. I don't believe I did. So the important thing again is these rejections, and there's still plenty of work to be done. Let's take a look at the futures charts and a couple other things I want to show you. Actually, let's go over to let's navigate over to Apple. I've covered that recently. Usually I don't cover trade ideas in the public videos. That's reserved for members, but I had posted this in Apple's such a big component of the broad markets that I've been covering this. It's an unofficial trade idea on the site. I pointed out this bearish rising wedge when prices were still in there. We broke down, moved impulsively. And yesterday in the trading room, I put up a chart here showing, let's see if I can find. Okay, here it is. I put it up about an hour before the close yesterday, highlighting two levels, this downtrend line, a minor downtrend line, as well as minor resistance at about 225.39, stating that's, my expectation was for a reversal here, that I was viewing this as a counter trend, or at least at this point, simply a counter trend bounce is strong, big move. You can see at the time, Apple was up 2.5%. And a couple other things. You got to see the PPOs in bearish territory, trying to backtest that zero line. But either way, I was looking for a failure here, and if we got it, that helps to confirm that yesterday's move, as impressive as it was nothing more than just a counter trend bounce in a larger downtrend to come, because we hadn't yet hit even my minimum target right here, about 215 on Apple. Fast forward to today. what do you have? You have a big rejection right on that level, right between the trend line and that minor resistance, which are real close together. A big bearish engulfing candle on the 60 minute. Now, yes, this comes not after a prolonged uptrend, but you can trade these pretty good on a 60-minute chart. I mean, here was a big red bearish. Let's see what happens. What I said in the trading room, I want to see some downside. So far, this candle is green. They may try to recover here, but either way, that's what I'm more focused on. Besides the fact it's a bearish engulfing candle, is the impulsive rejection off that level so far. That's where obviously the sellers stepped in. And yes, today's Apple's event, and as I said this in the trading room, that may override the charts, but much more often than not, any news or reactions to earnings, whether they're positive or negative, or reactions to an event such as Apple's big show today, those are usually priced in the charts. So there it is. And I can just say this: we're not far away. Everything I said on QQQ yesterday, it being an objective area to short on that back test, about as objective as it gets. Same with Apple, and we're still here. So if you shorted here in the trading room yesterday, or even right now, your downside, if it takes out this level with conviction, prints a solid 60-minute close above that 225, 40-ish level, we're probably going to go on take out the highs. And anything is possible. There's still divergence, and there still will be. So I want to say that it doesn't. In other words, I remain, even if we pop above here, the charts still indicate Apple is going to pull back. And so let me just say it this way to not be ambiguous here. My most bullish scenario would have Apple popping up above there, coming in back testing at a higher level, still putting in divergences, and these negative divergences I just highlighted here. Whereas my preferred scenario remains that this was just a kickback rally. Counter trend bounce will come down here to at least that 215 level. Again, that's my minimum target. And a couple other things I wanted to point out in this video. We'll look at futures real quick. Yeah, let's just jump over there. I'm going to make mention. I don't want to cover, I was going to jump over to the semiconductors, but I'm probably going to add some of those individual semis as official trade ideas on the site and maybe even the ETF. So I'm just going to say this. You can see the semis have been seriously under some distribution lately, moving lower. And you can look at most points in time. The semis tend to lead technology. When the semis start to go down, especially if they turn down first and QQQ is still going up, QQQ almost always follows. The semis are sort of the canary in the coal mine for the tech sector. So what hasn't broke yet is big tech. Everybody can't get enough of Apple, Alphabet, Amazon, although not really a tech company per se, but in that arena. But keep an eye on that. If you can continue to see the weakness in the semiconductors, sooner or later there's going to be a reversion to the mean, and you're going to see big tech, including XLK, which I've highlighted quite a bit recently. XLK is one to watch. This is the tech sector ETF. It's been dancing on this trend line so far. It's defended that, but when you see this level go with conviction, especially a daily close, a solid daily close below here, or a big impulsive break, when XLK breaks, when Amazon breaks, you want to get out of your longs and you want to be short. That's my opinion. Do what you want on trading, but there it is. So they're still above trend right now. For the time being, but I'm watching those, and I'm also, like I said, I'm watching Apple, I'm watching the semis. It all kind of comes in together. Let's take a quick look at the futures, and we'll wrap this up. Okay, this is ES, the S&P 500 E-mini futures. There's that level I've mentioned yesterday. I've been highlighting for a while. Again, it was support back here. Let me draw this out if you haven't caught any of the recent videos. This was support, support, support. It came after we had a trend line break here. We had a divergent high, trend line break back test, and we danced along this support level for a while. Once support is broken, it becomes resistance, as was the case here, here, here. And again, when we hit that yesterday, it was pointed out. We failed there on the first attempt intraday, or just shy of it. Tried it again yesterday, all throughout the overnight session off that level, and we've yet to follow up. So there's another thing. We had a big bullish day yesterday with the reversal. Bulls need to follow through, and as I'm doing this video, they can. We're only we're barely below that level right now. So again, I try to do these videos ahead of time. It's going to do nobody any good to come in here if we do drop down there and we break below this level, which by the way would be the next sell signal. So what I'm watching right now, micro levels, if you will, right here, I just drew your line. There was a support right here. It then proved to be resistance. So this was, let's box that in as, let's say, trading range, a smaller part of the trading range, and this being the larger trading range right here. And that again, that 2894-ish level is pretty much, or 2895, call it give or take, the top of the range. So, first check mark for the bulls will be a convincing break above there. So far we've failed there, but still too early to say the bears have won because we're in the range. So the next bears first check mark for the bears will be a break back down into here. That'll probably bring us to the bottom of the range. And this range is getting a little long in the tooth for a sideways trading range in ES. So again, and this will be what I call bears win if that level is taken out with conviction, 2865. So there it is, simple levels, not to oversimplify the markets, but for ES, that's what I watch. But again, I always take, I'll keep one eye on ES, even if I'm trading NQ, which is my preferred proxy. So with NQ, what you have is similar, very similar. You've had a little more volatility, which is usually the case. Tech stocks are more volatile, and that's what the NASDAQ 100 is chock full of. So there was the smaller trading range. Let me do this again. Like I showed you on ES, we'll call that the smaller trading range, and this is the larger trading range. And you can see we popped up. You can see this little consolidation area there, and I believe I had this line in advance, 75.46 or so. Boom, that's what we hit so far, and that's where we failed. And you can see a pretty impulsive move down so far, and we've dropped already into this range, yeah, down here. So, like I said, this is yesterday, and even now, since we have that rejection, if again, if you didn't short or you didn't exit longs, I still think it's objective. I can't promise it'll play out, but like I said yesterday, and I'll still maintain, that level was objective to short. If you didn't do it then, it still is now, because now you have a rejection off the trend line that I covered earlier, this one on the QQQ. So that helps to validate that as an important level. But again, let's not overdo it. There's a little bit of a battleground here. There it is. And that's, I think, going to be the easiest way to say this. As far as a swing trade, a trade that can last for a week or more, maybe a few weeks, couple weeks, bulls need to get this level back, get this trend line back on QQQ. Bears want to see this recent area of consolidation taken out. They want to see XLK breakdown. They want to see Amazon breakdown. And of course, that Apple that I showed you, want to see that play out. And that's it. Those are the levels. I think I covered it all. Let's wrap it up here. We're under the 13-minute mark. And I'll, if I see any interesting developments today, throughout the day or at the end of the day, of course, I'll always post what I see in the trading room on rightside-of-the-chart.com. But if there's anything really significant today, I'll do another video at the end of the day. This has been Randy Finney with the Right Side of the Chart. I hope you